and welcome. This is Melissa Armo with the Stock Swoosh, and today I'm going to talk to you about my strategy. Again, it is a swift strategy or a fast strategy where you can make money very quickly in the market, which is what I like to do. So actually, for those of you that don't know what I do, I focus on number one, gaps, and number two, shorts. So we shorted QCOM today. So my strategy is gaps, and gaps can have not only swift moves, but big moves. Let's take a look at this one here. So again, yesterday, QCOM, we're on QCOM here, this is a daily chart. QCOM closed at 148.46, opened today at 138.78. Dropped, fell, we were looking for 135, it broke 135. This could even be lower today, but the market's trying to bounce here a little bit, so this may take a little bit longer to wiggle and jiggle and go down. This could go potentially to 130. Again, if you want to hold this in a put. But getting back to what I was saying about my strategy, this worked very quick, very fast. And in today's markets, I think it's key to be able to get in and out of trades very quickly and fast, and the earlier in the morning the better, so that you are not at the mercy of news, economic data, the Fed coming out, any White House press conferences, or anyone or anything that's going to affect your trade. If you can make money early in the morning and get in and out in 5 minutes, 10 minutes, 15 minutes, then it doesn't matter what happens the rest of the day. And again, I'm talking about a day trade. Now, when I say a day trade, I mean a trade where you short the shares, okay? We shorted the shares of this, and you have to have a margin account to short, and you get out of the trade, and if it drops $1, you make $1. Now, again, I also did do a put in this, by the way, but if you don't have a margin account, you can open up an options account, and when I'm shorting in the room shares, you could buy a put. Now, the difference, the way that I look at options versus day trades, though, is that a day trade, I'm definitely always flat by the end of the day by 4 o'clock, and I'm looking to get in and out quick in the morning, which I'll show you what I did here in a minute. If I'm doing an option, though, I'm looking for a bigger move. Actually, let me just go back. I'm looking for this to fall down in here in the put, which could happen today. So I might get out of this today. I might. Or I might get out of this in a couple of days, depending on how long it takes to get down there. This could get to 130 today, though. Actually, this looks pretty good. We still have plenty of time left in here in the day. So anyways, here's the quick trade that I did. Swift, fast, out of the gate this morning. Stock closed here, gap down, open, dropped. We shorted it here, got the drop, out, boom, done. Again, 4 minutes, 5 minutes, 10 minutes, you could go back to bed. If you could get a move like this where something drops $1, that's huge, okay? Again, $2 plus, beautiful. Look at this, boom, okay? And again, I'm done then after I do the fast trade. I don't go back after it, back after it, back after it, because again, I'm in the put because I'm trying to get a bigger move in the put. But once you do a day trade and you're in and out quickly, you should just call it a day. The opportunities go down as the market goes on throughout the day. The morning is the most advantageous time to trade. So again, what is my strategy? Number one, gaps, and number two, I focus on bearish gaps. So in other words, I'm never reversing it. So I'm not taking, I wouldn't have been looking at QCOM as a long. Like, let's say I had looked at it and I said, I don't think this is going to drop. I wouldn't have flipped it. Do you know what I mean? So I have a method that I devised. This is my system where I rate the gap on the daily chart, and I teach it in a class once a month where I'm looking for 26 points. If it gets 20 or more, though, I'm good. Like, I don't have to have 26 to do it. I've got to have 20. 20 is the cutoff. If I get 20 points or more, I will take the gap in the direction of the gap. And again, a 17, 18, 19, it's 50-50 chance of working or failing. Now let me go over here and look at, oops. Let's look at Tesla. This today actually gapped down. Tesla, now this is rallying. So I did not do a day trade in this here today. But I just want to show you that this is a gap down, okay? So this is why you have to have a criteria, because you can't short every gap down, all right? And you can't go long every gap down either. That would be ridiculous. But anyways, this closed yesterday at 282.16. and opened today at 280.01. So technically, Tesla did gap down today. This was a gap on news. QCOM was an earnings gap. But anyways, technically, this had a gap down today, but it didn't meet my criteria, okay? Let's look at another one. Here was the other one we did the other day, EAT. So EAT was the 29th, okay? Stock closed here, 428, 160.67, boom, open in the morning at 147, dropped, fell off a cliff. I'll pull up this chart in a minute to show you the 1 minute. Again, I take the trade in the 1 minute, but I'm rating it and determining the directional bias on the daily chart. So I'm getting the fast move in the morning out of the gate in the 1 minute, and then I'm looking on the daily prior to the market even being open to determine how I want to trade it, okay? Or if I don't want to do it at all. Like again, you wouldn't have done Tesla at all today, even though it was a gap down. But anyways, getting back to the EAT, this is a huge bar. This stock can rock and roll. This could have gone to 130 here. I didn't do a put in this. I could have actually done a put in this, and I didn't, but I did a day trade in this. Anyways, 130 was the piggy target. It actually got there. No, it didn't almost get there yesterday. Well, it pretty much almost did. 76 cents. Today, it looks like it made it down. Actually, today it went to 128. So if you did do a put in it, you would have been looking for 130. Could have got out of it yesterday, could have got out of it today. But anyways, I don't always do a put and a day trade in every single thing. These were the monthly puts, so I didn't do it. But let's go back to the fast trade, the swift trade out of the gate. Again, we're on the 1. Is that Tuesday? That was Tuesday. Here. Beautiful, beautiful, beautiful EAT. Okay, again, this was a short. So again, why do I prefer to short? Like today the market's up. Now, I didn't go long the market here today. There's a lot of reasons why I did not. But the fact is that you can short and find things to short literally almost every single solitary day, even if the market's strong, even if the market's in an uptrend, even if the market's rallying. I know that sounds crazy, but it's true. And then when you get times or periods where the market is selling off, you get even bigger moves to the downside. Again, I'll pull up the market after this and show you some of the plays we did in the market this past month. But here was the EAT. This was 429. Again, got the drop. Beautiful trade in here. You could have held this all the way down into here. Just a very nice, this is what I call the money move. Boom. Okay, this is a big move down in here into the drop, and you could have even held it even more down into here. This is a nice trade. This was a nice trade. And again, I didn't do the put, but you could have. You could have, because look where it went. All right, let's look at the market. So the market is trying to move up today. Microsoft had earnings last night. Meta had earnings last night. Both were up. And they're trying to lift, and they're trying to lift with the overall market. Tonight we have Apple, tonight we have Amazon, and I have no idea what they do in the reports. But let's go back to here. A month ago. It's hard to believe. So today is May 1st. So again, every single day I'm looking for a different stock, a different ticker symbol. I don't do the market every day. You don't have a good setup in the same stock every day. You don't have a good setup in the market every day. I know people love to do futures, but you can't get the same consistency in trading futures as you can with my strategy, where I will sometimes do the market, that's true, but I mostly do stocks. And again, whether you do them as puts or day trades on margin is up to you. I like to do both. But the fact is you get bigger playthrough and bigger moves in stocks and more consistent, profitable gaps, because not every day is the market playable or what I call predictable. And again, by predictable, I mean applying the rating system, applying the method, going through the steps, going through the process, and then rating it and getting the total. And if you're someone that's just trading the news and trading on the fly, you've been having a tough time for 2025 for this year. You might think it's easy today or easy the last couple of days, but don't think all of a sudden this is easy peasy. The fact is that trading on news or based on what you think the Fed's going to do or even what happens with tariffs is not a strategy. It's not consistent or something you can rely on to make money. So a long time ago, again, I've been trading for 17 years. I developed my own system to determine where a stock would go. And I ended up veering to the short side because I made a lot of money one day in a short. I said, oh my God, I love to short. And then I realized I also had a niche in shorting because most day traders prefer to go long. The only reason I can think most day traders prefer to go long is because they understand the concept of buying low and selling high. But shorting can be just as profitable, if not more profitable. And to me, easier to spot and see, and you get bigger moves because panic comes into something when it drops. There's no panic in going long. Like even right here today, actually before I talk about a month ago, even today, there's no panic here. We're an hour and a half almost into the open. If this was panic buying, we'd already be over 490. We'd be at 500. Like there's no rush here. There's no emergency. There's no rush, like gotta get in. There's no panic going on here right now in this gap in the market. Again, maybe people will go long later today. Maybe people will go long tomorrow. Maybe more longs will step in and continue this up into next week. I don't know. Because we have an unemployment number tomorrow morning and because we have Apple and Amazon earnings tonight, which will rock the market, whether up or down, I don't know. People might be cautious and waiting for that. But anyways, getting back to what I was saying, panic buying is something that's very, very rare. Panic selling happens a lot, happens all the time. And again, we saw that, hard to believe, a month ago. Actually, so no, here was April 1st. Actually, let's go back to here. No, let's go all the way back to the beginning of the year. Where's the beginning of the year? Where's the first day of the year? Here. First day of the year, we actually had a gap up. I'm on the QQQs. And then we fell. Not a big deal. Held support. Gapped up day 2, January 3rd, rallied. Had another gap up here, 1-6. Again, we're into the first full week now of the year. January 6th, people are back from the holiday, whatever. Again, then we fell. Not a big deal. Still very strong. Market was strong right off the highs back from December. 539.15. We eventually then made brand new all-time highs in February. Pushed up a teeny weeny bit. We got over 540. 540 was the next number. 540.81. And then all of a sudden something happened and the market started to fall. And again, we were in shorts. I was doing shorts early in the year before the collapse at the beginning of April. Again, the market had been very bullish after the election in November and December. But I forget exactly when the tariff talk started to happen, but there was a lot of reasons that things were going on. And then, of course, we had this massive sell-off that happened here. Again, like I said, it was a little bit, a couple of weeks ago, almost a month. This was April 1st, April 2nd. Tomorrow's April 2nd, May 2nd. And then here was April 3rd. So it's almost a month. And this is where the market collapsed and literally went from the close on 4.2. Let's look up there, the square at the top, see the number? 476.15. Within 1, 2, 3, 4. We're at 402.39. So again, a big, huge differentiation when you're looking at how we started the year, how we did make brand new all-time highs in February, which wasn't like 100 years ago. It was only like 3 months ago. And even where we are now, we're very far off the highs. So panic selling happens very quickly, very fast, and that's how you can make a lot of money. Now, we happened to already be in puts when that collapse happened in the market. When it occurred, we were already in puts before that drop date of the 3rd. But, you know, for talking about options, I was talking about the QCOM here. One of the benefits, I think, we saw that in the EAT, if you did the EAT. One of the benefits, I think, of doing, here, this is lower, this is a good trade. One of the benefits of doing options is that you can hold trades longer and you can hold trades overnight. And so that's a huge benefit to me. Again, with the market, it was very beneficial to do that because of the fact that we had such a big move that was captured in the gap. So again, getting back to my strategy, I'm looking for a gap. I teach people my method once a month in a class, how to rate it to determine if it's going to continue in the direction of the gap. So again, when I got up in the morning and saw this, I said, yes, it's going to continue to drop. So we shorted it, and then we did more puts. And then that's what happened here, and that's what happened here, and look what it did. Now today, like I said, we're up. Whether or not we continue has a lot to do with the unemployment number tomorrow morning and Apple and Amazon earnings tonight, because they affect the market in a big way. But I think this week is a very important week for markets. It's been one of those years to trade where if you know what to do, you're having a phenomenal year. If you know what to do, if you're an astute trader, if you have a set system that you follow every day, and you know how to read momentum correctly and directional bias, you're having a huge year. I really have never seen trading like this in 17 years of trading. The types of trading we've seen this year, the opportunity has been huge. Again, sometimes it's been dicey, I will say that. But the fact is that it's been a very profitable start to 2025. If you want to know where we go the rest of the year, you don't have to necessarily predict too far out of the future. If you're doing day trading, active trading like me, where you trade in and out quickly on the day like the QCOM, like we did this morning, or if you're even doing an option where it's out for a week, that's a short trade to me. So you don't have to predict what's the Fed going to do, where's the market going to be by August, September. Nobody knows. No one has those answers, because I can guarantee you no one predicted that the market would have the sell-off that it did, or that Trump would put the tariffs on, or then even pause the tariffs when he did when we had this green bar here on this day. I remember that was 4.9. So don't try to predict too far out. If you're really someone that wants to trade the market, the best thing you can do is learn a consistent high win ratio system, which mine is, that allows you to get in the fast moves, the swift moves, the fast moves, quick in and quick out. Again, you could do options quickly if you want. I'm trying to hold things a little bit longer, but you still could trade options quickly, even faster than I'm in and out of them. And you definitely could do the day trades like I do them too. Because again, finding something to trade and holding it forever and ever is, you're going to get killed in this type of market. Because the second that you think it's higher, then all of a sudden it sells off. Or again, the second you think it's lower, all of a sudden it rallies. You know what I'm saying? So again, one of the biggest things that's important with trading, this is in any environment, not just this year with volatility, is to take profits when you're up. You have to chunk it out. You really do have to make sure that you get out of things and take profits. We're not in a buy and hold type of environment. And I'm not saying 2024 was a buy and hold environment, but definitely after the election, when we had that nice rally and that beautiful move up, and even off the summer lows, once we kept going there from August into the election period, you could have held stocks and you could have held positions longer than you've seen even this year, or could see this year. So again, I like to short, whether the market's bullish or bearish. I like to do shorts. They move fast, they move big. I've created a niche for myself doing it, and I read the direction based on the gap, which again, I'm seeing in the morning, so I prepare what to do and know exactly, even before the market opens, what I want to do. And that's how I knew I wanted to do this. And this looks good. This looks very, very good right now, actually. Could have done a second day trade in this today, so we'll see if this continues down here today, or it needs another day tomorrow. So if you have any questions, or you're interested in learning my gap method, if you like to short, if you want to do the fast trades, email me at melissa@thestockswoosh.com. Good luck this year in 2025. Have a good year. Be very careful. Be very thoughtful about your trades. You may think you know what's going to happen in the future. And again, sometimes I appear on TV, I appear in the news, I give my opinion on the economy and the stock market, but many people are making all kinds of predictions about things that they shouldn't be making, in my opinion, because you really don't know what's going to happen long term. And when I say long term, I even mean several months from now. It's a lot easier to pick the fast move and to trade the fast move in something than it is to hold something for a long, long time. That's true in any market, actually, but it's definitely true in this market. So good luck and have a great year.